Federal government targets 1 million jobs through gas intervention fund. Lagos-Kano train services resumes August 13th as Kaduna to Kano and Kafanchan follow. More revenue for government as NNPC posts 43.57 billion naira trading surplus in April. Plus oil prices fall nearly 2% on Monday, extending last week's steep losses on the back of rising US dollar. The program is Business Express, reaching you from Abuja. I am Musa Abubakar. Now let's bring you up to speed with business development. The federal government says investors must meet 7 criteria to access the 250 billion naira CBN intervention fund for gas value chain businesses. Technical advisor to the Minister of State for Petroleum Resources, Brenda Ataga, on Sunday in Abuja listed the criteria when she addressed newsmen. Their technical feasibility, overall business plan, and skills and experience outputs of the business plan, as they must meet government's national objective of creating skilled and unskilled employment. Another criterion is the socio-economic impact of the business plan and what percentage of internally generated revenue it will contribute to the state in which the applicant plans to operate. Others are the financial feasibility of the plan, economic and finance models of the plan, and the environmental feasibility of the plan. Ataga said 27 applications had been received and they have a limit of 10 billion naira each. She added that on the SME's portion, 50 applications had been received, noting that SME scheme had a limit of 50 million naira and aim at supporting the propagation of gas and also creation of minimum of 1 million jobs through access to finance. Now, the Lagos-Kano train service will commence operation from Friday, August 13th. Regional District Manager, Northern District of the Nigerian Railway Corporation, Ismail Adebiyi, made this known in Zaria, Kaduna State, on Sunday when he spoke with the News Agency of Nigeria. He said the train will leave Lagos on Friday evening and arrive in Kano on Sunday morning. Adebiyi also said the corporation had concluded plans to restart the Kaduna to Kafanchan and Kaduna to Kano train service before the end of August. He added that it will rehabilitate 100 wagons to further strengthen the rail sector within the next 2 months. He explained that 21 of the rehabilitated wagons will be used in the northern district of the rail service comprising Kaduna, Kano, Jigawa, Yobe, Katsina and Zamfara states. He said the Kano to Nguru train service was still active and that plans were at advanced stage to enhance the traffic on the route by returning coaches that were dropped because of the COVID-19 pandemic. The federal government wants that all travelers outside the country with agricultural produce should present the items for pre-export quarantine checks. This includes food items for personal consumption abroad or trade. The Nigerian Agricultural Quarantine Service, in a statement, decried the spate of seizure and destruction of uncertified commodities when they arrive at the destination country. The statement added that recently 15 Nigerian giant land snails were impounded by U.S. Customs and Border Protection at Intercontinental Airport, Houston, Texas. The snails were linked to a Nigerian woman who neglected to declare them and concealed the snails in 3 Ziploc plastic bags loaded with beef and fresh leaves. Snail is a promising export commodity, and many call introduction could pose to environmental safety and public health within their borders. Now, in order to boost global liquidity amid widespread COVID-19 challenges, the Board of Governors of the International Monetary Fund, IMF, announced that it has approved a general allocation of special drawing rights of $650 billion for Nigeria and other countries battling funding challenges, of which Nigeria is to get $3.35 billion. Today on the program, our attention is on IMF's SDR to Nigeria and others. I have joining me in the studio IMF Nigeria representative. He is Mr. Ari Eisen. Glad to have you on Business Express.
Thank you for having me. It's a pleasure and honor to be here.
Thank you. Now, we woke up to the news that the IMF has approved the $650 drawing right. What does it mean?
Thank you. This is really a fantastic opportunity, and the IMF just approved those $650 billion to boost the liquidity of all our member countries. Nigeria is one of them, but this is a historical event. The last time the IMF had an injection of liquidity that was sizable was after the global financial crisis in 2009. At that time it was $250 billion. So now it's $650 billion to help our member countries fight the consequences of the COVID-19 pandemic and the impact that it has in our economies.
Okay, how significant is this to the global economic recovery process?
It gives a huge boost to the liquidity, particularly of the most vulnerable countries, low-income, developing and emerging economies, who, because of the COVID-19 pandemic, really had to act with very expansionary fiscal monetary policies and had used some of the buffers that are now need to be rebuilt, if you wish. So it's a major boost for the global economy, particularly to the most vulnerable countries.
Okay, how significant is this particularly to Nigerian economy?
Nigeria has a quota of 2.454 billion SDRs. That's 100% of quota. That is the equivalent to about $3.35 billion. This, just to give you an example, represents 10% more or less of the current stock of international reserves of the country. So that will give foreign exchange liquidity to the central bank and to the economy to be able, for example, to import essential items like vaccines, or simply to have a bigger buffer at the central bank so it can actually manage its monetary policy and exchange rate policy better. So at the end of the day, Nigeria will decide the best use as a sovereign country of those funds that will be injected, as in fact any other country.
Now, in what format will it come? In cash? Or what?
The SDR is not, is a reserve asset. It's not cash. It's a credit that goes directly to the central bank. Once that reserve asset, which is very precious, arrives at the central bank, then the central bank could convert to other currencies if you wish, or it can be kept as SDRs as part of the international reserves, the stock of international reserves of the Central Bank of Nigeria.
But wouldn't there be a charge? I mean, will there be a charge attached?
So the full amount is considered a very long-term liability. There is no debt burden. Debt doesn't increase because of this amount. What it does, of course, you need to pay interest, which is a very small interest on the SDR balances that you hold. But if you hold it in SDRs, you also earn interest. So the impact on that, if you hold, is Zero. But even if you don't hold SDRs and you do something else, it's a very small amount in the service that you need to
Can
honor.
they be used to can they be used to settle debt?
It can also be used to settle debt. It is at the end, as I was saying before, the sovereign decision of the member country, Nigeria and others, on how best to use. Now, it's a sovereign decision, but it has to be a wise decision.
Okay.
And a wise decision means that it should be transparent and it should be a responsible use, of course, it goes without saying, to the benefit of the country and of the people of the country.
Okay, is there a framework on how the SDR allocations are to be used by various countries?
The only framework is that this is a sovereign decision, meaning that each country can decide how to use, but there is an expectation that the use is wise and it benefits the people and the country, and that the use is transparent and done in a responsible way.
Now, with Nigeria's rise in debt profile, would it have any impact? Would it have any, the desired impact?
As I was saying, that the debt burden or the impact on the stock of debt is very small, because this is a very long-term liability.
Okay.
And the interest to service that liability is very, very small. So it won't have. And in fact, as you mentioned before, if there is a decision to reduce the stock of debt, that can even contribute to the debt burden. And some countries may decide that this is the best use they have for the SDRs.
Now, how would you assess the expectations, the short and long term, regarding the injection of funds into the global economy, injection of this SDR funds?
For the developing countries and middle income, emerging economies like Nigeria, there is a very positive short-term impact. Okay. It gives liquidity and availability of new foreign exchange to be able to import essential goods, just to give an example. Okay. And recompose the buffer of the central bank. For rich countries, in fact, they may not need that liquidity bust, especially if they have very strong balance of payments position. This is why we in the IMF and our managing director, Kristalina Georgieva, has said time and again, it would be very useful if those strong economies could share their share. Okay. Of their SDRs through our various options. One of them, we have a poverty reduction trust, poverty reduction growth trust that helps low-income countries. So the SDRs of the rich countries could be channeled to those trusts. One of them is the PRGT, to more vulnerable countries.
Okay, can you tell us more about the trust?
The trust finances IMF programs to countries in need that work with us on IMF programs. We have various facilities, many structural in nature and long-term, that can help vulnerable countries with balance of payments problems that are chronic and structural deficiencies that can, in the request of the authorities, by the request of the authorities of that particular country, request our assistance of a longer term duration.
Okay, in the allocation, is there any special consideration for like low-income countries?
Yes, so for those programs and eventually that could be financed by the PRGT, to give an example, there are conditions attached to disbursement of those funds. So, you know, one way of the channels, one way to channel those funds is to the use of those programs, and to make sure that the PRGT fund, the trust, will have more funds to be able to help those countries in need.
Okay, is the IMF in any part of the expenditure plan of member countries?
You know, in those countries that we have programs, there may be discussions on how funds can be used, but not those funds. Those funds, those reserve assets, they are different in nature, in the sense that they are for all member countries, and they will be disbursed on August 23rd for each member country according to its quota. And really, as I said before, it's a sovereign decision, and we certainly would expect all countries to be wise in the way they spend, but we do not make any suggestions or recommendations on how best the sovereign country will make use of those funds.
Okay, are there specifics for application of the funds?
No specifics other than be transparent, be responsible, and make sure that the impact is the highest possible for the country and for its population. We are talking about a very precious resource that is not given all the time. And it's the IMF once, for the last time it was 12 years ago because of a crisis. So this is really because of the pandemic, and really to be able to help our member countries navigate these difficult times.
Okay, thank you very much.
Thank you.
Nigeria resident representative, Mr. Ari Eisen.
Thank you for having me. It's a great honor and pleasure.
Nigeria stock market ended last week bullish as investors gained 137 billion naira. Bosede Abel has a summary.
Last week, the all-share index on the Nigerian Exchange Group closed the week on a positive note with a 0.68% gain to close at 38,380.75, while weekly market capitalization increased to 20.2 trillion naira. Volume of shares, however, dropped to 989.6 million shares from 1.3 billion naira last week on the floor of the exchange, valued at 8.1 billion naira in 19,617 deals. All indices finished lower, with the exception of NGX Mainboard, NGX Premium, NGX Lotus 2 and NGX Sovereign Bond indices, which appreciated, while the NGX Growth Index closed flat. The financial services industry led the activity chart with 603.6 million shares. The conglomerates industry followed, while the consumer goods industry occupied the third place. Trading in the top three equities were Transnational Corporation of Nigeria, Sterling Bank and FBN Holdings, measured by volume, led the activity chart in the week. At the end of the week's transaction, 23 equities appreciated in price, 36 equities depreciated in price, while 97 equities remained unchanged.
Now, the Nigerian National Petroleum Corporation, NNPC, on Sunday declared a trading surplus of 43.57 billion naira in April 2021, representing a 23.64% increase over the 35.24 billion naira surplus it recorded in the previous month of March 2021. Spokesman of NNPC, Dr. Kenny Obateru, said the figure came from the April 2021 edition. The report shows the trading surplus or trading deficit is derived after deduction of the expenditure profile from the revenue for the period under review. According to the report, the NNPC Group operating revenue in April 2021 as compared to March 2021 increased by 17.73% or 80.67 billion naira to stand at 535.61 billion naira. Similarly, expenditure for the month increased by 17.24% or 72.34 billion naira to stand at 492.05 billion naira, while expenditure as a proportion of revenue stood at 0.92%. Same as last month. The report attributed the rise in trading surplus to the activities of the corporation's upstream subsidiary, the Nigerian Petroleum Development Company, such as crude oil lifting from OML. Oil prices fell nearly 2% on Monday, extending last week's steep losses on the back of a rising US dollar and concerns that new pandemic curbs in Asia, especially China, may set back the global recovery in fuel demand. Brent crude futures slid by $1 27 cents, so 1.8% to $69.43 a barrel after having slumped 6% last week, their biggest weekly loss in 4 months. U.S. West Texas Intermediate crude futures fell $1.29 or 1.9% to $66.99 a barrel after having a slump nearly 7% last week in their steepest weekly decline in 9 months. Gold reels to 4-month low on fears of early Fed tapering. Here comes the latest in the commodities market. European markets started the week on a mostly negative note as Asia-Pacific markets trade mixed. Neko Kohas Global Market Update.
Hello and welcome to the Global Market segment. Asian markets broadly struggled for gains on Monday as investors kept an eye on the COVID-19 situation across the region, with markets in Japan and Singapore closed for public holidays. The Hang Seng Index in Hong Kong added 0.4% to close at 26,283.40, while the Shanghai Composite rose 1.06% at 3,458.23. European stocks, on the other hand, were mostly lower in early trade on Monday. Germany's DAX declined 0.14% at 15,739.36. London's FTSE slipped 0.28%, while CAC 40 of France dipped 0.06%. In the US, stocks traded mostly lower early Monday after the Dow Jones Industrial Average notched a record close on Friday following a stronger than expected jobs report. The Dow fell 109 points, S&P 500 dipped 0.19%, while Nasdaq 100 was near flat. Meanwhile, African markets started the week on a positive note as most stocks entered positive territory in early trading. South Africa's JSE Africa Top 40 added 0.5% at 62,509.23. Kenya's Nairobi All Share climbed 1.48%, while Tunisia's Tunidex was near flat. And that's Global Market Update.
Let's see how the Naira is exchanging against other currencies. This is where we end this edition of Business Express. We value your feedback, so keep the comments and observations and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTH channel. Business Express returns Tuesday by 9:30 a.m. I am Musa Abubakar. Stay safe.